Last couple of weeks has been volatile in the market.
Right.
We positioned ourselves pretty well headed into the rally, and I thought maybe we could talk about our strategy and what we've been doing.
Sure. I mean, to me, what you have to do is you have to prepare for an economic recovery, but not necessarily in this country other than housing. Housing let us down. It's possible housing could lead us up, but rather just play directly housing. What I see happening is that some emerging economies are doing better than domestic, and China is a tremendous engine. So whatever you can find in America that's levered to China, I think is going to do well.
Right, and we had, in the beginning of the year, we were very conservative. We bought the China ETF.
Right,
and
FXI.
And then on weakness, we've actually been buying and adding a few names like Yum and Nike and 3M. And these are names that we were avoiding all last year.
Which was smart.
Right.
And I think that when you take a look at Asia, you know 3M is really linked to Asia.
Yes.
I mean, probably almost half of, I think, the growth is from Asia. Yeah. Yum is a Chinese play because KFC and Pizza Hut, Taco Bell, really no growth in this country, although they're profitable. And I look at Nike, and I think it's a unique worldwide. I mean, you know, China has been all of their growth. Right. And so, I mean, these three are as close as, I mean, a lot of people used to want to own GM because of China. That didn't work. Procter because of China. That doesn't work. These three work, and they're all cheaper than I've ever seen them, frankly. This could be generational cheapness in these stocks.
And they're also doing things here in the U.S. They're cutting costs,
right?
They're cutting costs. They've got strong balance sheets, and they're using the cash to grow elsewhere. And China is definitely the main theme.
Right.
So those are the ones that we like. How would you rank them in order?
Well, I just think that a lot of it is price.
Yeah.
I know the commodity costs have come down way big for Yum, so I really am into Yum. Nike is a reduced expectation story. I think they took the expectations down so low that we could do fine. Look, 3M is difficult because it rallied very quickly after we bought it, and I want to let it to come down to have 4.5%, 5% yield before we get it bigger.
Right, and so at the end of the day, we bought into when the market was down. We've rallied quite a bit.
So we didn't pay up.
We didn't pay up, and these are the names that we're thinking about adding to. We will add to them on weakness, and we have our buy levels. So
excellent.
Great.